you've seen that it was coming up the top of the Bollinger Bands here, and you're like, fuck, that's
Yeah,
getting hot.
yeah. And I was fucking way over. I was like, yeah, it's something happened.
That's
So
good. Yeah.
yeah,
Nice one. Yeah, the a thing to use with the Bollinger Bands is this BBWP as well is really good when it starts breaking down well below the moving average. So as it's moving back down, you see
yep,
that it's going to start moving. This is an extreme example because it was just a full red bar, right? That was like a 30% move in one day or something like that.
yep,
But if in, for example, here, if we look at this, because the BBWP is Bollinger Band width percentile. So as it starts moving down below and crossing over the white line, which is the moving average, you can see that it starts breaking away from it right now.
yep,
Some of the time, especially when it breaks through the RSI like this, you'll see that it goes up for another one. So it's the safe profit taking and the safe exit point will be on the first break above the RSI, and when the BBWP starts moving back down from the extremes, from the extreme expansion phase, like up here.
yep,
So that's like moving down from extremes where you can see that it was like way outside the bands here, and it was way red up here, and the RSI was overbought. But a lot of time you'll see that one last push up, like those late to the party buyers. This is what that is. These late to the party people, where they come up and then you'll see the BBWPs like well and truly breaking down here, and that is contracting. So that is showing that it's moving back within the the Bollinger Bands. It's moving back within the Bollinger Bands, and this line going down towards the blue is the price action heading back down towards the mean, which is the orange line, the moving average inside the Bollinger Bands. So as price ends up correcting and then consolidating, you'll see that it moves down into these lows, these super lows, where it starts going blue again, and not until it starts breaking away hard. You can get these fake outs, and this is direction neutral, right? So this breaking up can be the price breaking down, or this breaking up can be the price breaking up. But when we start seeing it fully breaking up like this, and we started moving into the oranges, that's when you started getting this real hard run up against the Bollinger Bands there. But what I was saying about the RSI is like you see that first push, and
yep,
then you're incurring more risk as you wait. But as you wait and see where the second push is, a lot of time, especially if it hangs up above, within this like overbought area, you'll get that second push up there, and you'll get that second bit for that to squeeze out that last bit of profits that you might be getting. Especially if this is trending down, that's a good signal that this is like the last squeeze up for the time being. And then you can see that if you go, that's a high, and that's a high there, and then you look at the RSI, that's a high, and that's a high there. So once this candle closed, especially this candle right there, so this candle closes below or equal to this candle, that signifies this as a high. So that solidifies the fact that this is bearish divergence, so the opposite to bullish divergence, and that's a sell signal, right? So that's a perfect case of bearish divergence right there. And now we're heading down. So it's like when you start seeing, the RSI in overbought territory, and you start seeing this in extremes, it's like sell signal. But yeah, that second last push up could be for the greedy sellers if you wanna go for it. It's also, you could also set like stop loss, like if you were here and you say we took some profit, and then you could set like a stop loss like below here, and
yep.
wait to see whether you get that other leg up, or you hit this stop loss, which is pretty cool. Good shit there, Marto.
Yeah, cheers, man.
Good shit, mate. So I'm going to do the analysis in this order today, starting from Bitcoin Fear and Greed Index, just to get a general consensus on what's going on in the market and how everybody's thinking. I think that we're back in the fear. We are back touching the fear nice and lightly here. Yesterday we had extreme fear when the Bitcoin price was reaching that low point. This is still really ranging. I mean, it has spent much more time in this fear area in this fear area than it has anywhere else since the end of November. And also, I think it's important to note that most of the time when it has come down into this fear area, it has stayed in this fear area for a decent amount of time, basically a month there, a month there. With if you ignore that spike, another decent segment right there. So quite a fearful market still, and that's seen by all the fast profit taking every time that there has been a leg up in Bitcoin. So something to take note of. And if you like to dollar cost average into Bitcoin and buy when the market's fearful and sell when the market's greedy, we fearful. On to the next thing. Let's have a look at the total market. So the total, here we have the total crypto market cap, all coins including Bitcoin, as Bitcoin holds, I think, over 40%, as Bitcoin holds 41% of the total dominance of the market cap. It's pretty derived by the Bitcoin price, but we can see still in that same sort of channel that we're about to talk about that Bitcoin's in. But you'll notice the difference in this total market cap is that we're not touching the bottom lows, and that shows me that altcoins are jetting off faster than Bitcoin's jetting off. So altcoins are quick to fire, as the total market cap of all crypto did not fall down to this channel like Bitcoin did. Altcoins have jetted off, and or altcoins haven't bled as much to let it go that far down. In comparison to the amount of altcoin correlation and bleeding that has happened recently. So that's something to take notice. Altcoins are still pretty jumpy. You can see on the side here on my watch list, we've got some gainers in the altcoins. S&P and NASDAQ as crypto is extremely correlated, unfortunately, to the S&P and the NASDAQ, especially the NASDAQ and the tech sector of the stock market. We have a look at the NASDAQ first. Actually, I have a look at the S&P first, sorry. I have a look at the S&P, and you can see that the correlation remains, as much as people keep saying. I've seen a few charts and analysts talking about how the crypto market is starting to decouple from the stock market. That has been everybody's wish ever since it became correlated. The whole crypto market used to wish for Wall Street to come into crypto because that would bring more capital. But as soon as they got there and after the pump, everybody wished they would fuck off, because now it just moves and is manipulated exactly in line with, well, not exactly, but extremely high percentage of correlation to the American stock market, and specifically the NASDAQ. You'll see shit like this. It's not exactly the same as a Bitcoin chart, obviously, but you'll notice that that pump and that dump and this green candle is basically on nearly the exact same dates as when Bitcoin's recently just had this green candle yesterday or today, and then this happened all on the same dates. So we see that the NASDAQ is bouncing off this strong support line and resistance line. Pivot points there, pivot point there, pivot point there, breaks through, retest on this day, had a lot of strength, come down, and it'll be very interesting to see where the S&P goes. But you'll notice that a lot of the time Bitcoin leads the S&P, so they're correlated, but Bitcoin moves first, most likely because it's a 24-hour market. So it's a strong S&P is a good indication of what will be a continued strong Bitcoin. But to look for the leader of the pair, you probably see Bitcoin move first, actually. If we flick over to the NASDAQ, predominantly tech stocks, we saw a breakout of this rising wedge on a bear channel, rising wedge on a bear trend, has a over 68%, moving into the decent deep 70% chance of breaking to the downside. It's just what happens after that, and whether it finds a nice strong support line, which it has. You see it at the top of that pivot point. You can run this line along, and I'm sure you'd find some other importance back down here, just like that, if that line's straight. Yeah, won't get too far into the indicators and stuff like that. Looks like consolidation to me. If I just have a quick look at this, broke down from this RSI trend line, which is not a good sign. And consolidation, if you flick the Bollinger Bands up, yeah, it looks like it's just going to consolidate at this support line for a little bit and see what happens on the macro level to then proceed its next move. Have a quick look at gold. Gold's interesting, especially because it's been pumping. Gold had that massive bull pennant for the pattern people. Bull pennant, bull pennant. Had a lot of these times where it touched this top of this trend line and boom, boom, boom. Bull traps here where I have a wick above, doesn't close, wick above, wick above, wick above, wick above, wick above, all the way to, you'll see strong divergence occurred here somewhere. Might have been on a larger time scale, but I've got these two arrows here on these bottoms that were indicating a form of divergence. I think it was got a low, a higher low, a low, a lower low on an uptrend, bullish continuation insinuated. Also, you've got a pennant which is running out of room. They break usually when they're past about 78% full on average. So when that breaks, when that's running out of room and it's getting past the 78%, which it was getting real close to that, we had this strong move up. If you flick to the other chart, we have a look at where we posted in the group. We can, when it was here, I believe, we're saying that this is, it is reaching back on this upwards trend line, and we'll see what happens. If you are eager to jump on gold and the huge macro uptrend that most people believe that gold is in, now it was touching this bottom trend line. If you're interested in buying, but then we also put in here that if it does break through this and it moves within this zone here, this would be the best buy zone if you're given the chance, and we have been given the chance for a while. So gold still looks strong. You can see if we look at the volatility there, it's expanding. It started expanding off the lows. We got a buy signal on this stochastic I've been using. It's really good. CM stochastic MTF. It's a stochastic variation. The buys, I'll be doing videos about this soon. Just writing heaps of notes and taking a lot of information about my experiences with it. But one sec. On the lows, when the moving averages cross below the oversold area, you get a buy signal, and if they cross above the overbought area and start heading down, you'll get the sell signal. So you need to use that alongside other indicators. But we've got a buy signal here. We got a contraction, and then we still got that buy signal running while the expansion begins, and gold then in turn started expanding. Targets, it's going to come along with a lot of resistance because gold is gold and it moves extremely slowly. But if Bitcoin does become correlated to gold like everybody's hoping for, then that would be great, because gold doesn't really look like it's going to slow down. It's just going to take a long time to get anywhere, as it does, because it's gold. First thing we look at is Bitcoin trend. So Bitcoin trend, I made a note there saying higher lows, which is true. It's making higher lows and higher highs. So that is an uptrend. That is basically the definition of an uptrend, higher lows and higher highs. We have moved back into the consolidation range. So I would definitely prioritize the fact that we are back into a bottom consolidation area than I would the fact that we are in an uptrend. Breaking above the top of this pattern, this range, that we were in, does signify, and then getting multiple green candles above that does signify the potential start of an uptrend. But as you can see, the selling pressure was very strong, and that lined up exactly with the sell-off on the S&P as well, I believe. So late March right there. So same date. So unfortunately, not just Bitcoin's fault. It's a global thing. And the stock market dumped like a motherfucker, as well as Bitcoin. And we got hit straight off the top of this channel, but we also got hit straight off the top of the 200-day moving average. So that's something to take into account as well. We'll talk about that further when I get to the moving averages. So trend, you will see some people will argue that we are now in an uptrend because we are making higher lows and higher highs. That is technically the definition of an uptrend, but I will counter argue that and say that by coming back in this red candle here, coming back into this range, we are back into bottom consolidation, and people should adjust their portfolios accordingly to that. that reality. That is that. So the next thing would be Bitcoin ranges. So basically expanding on what I just said there. And also about this channel, channels, when it bounced off this bottom of this channel here, it's sort of just similar to what I say about ranges, is that the more something does within this pattern, the less, every day that passes, the less likely it is that it's going to stick in this pattern, because more and more people get clued onto it, more and more people trade accordingly. And when enough people are going long off the bottom of this channel, because they think it's just going to bounce off the bottom of this channel like every other time, that's when it breaks down and fucks the most amount of people up as possible. So the more that it pings around in something, every single time that it hits, is one time closer to when it fucking goes through it, in either direction. So that's important to note as well. Flicking over to ranges, we'll get rid of this. If we flick on the range spectrum, we'll see that we've been moving around within these ranges. We tried up with a big candle through the dead zone, flicked around within this buy area here, but we didn't get the confirmation. So the confirmation that this is staying in this range would be a movement above and a candle close above the previous high here that we made there. So for now, all it made was a high and then a low, and it didn't make that further confirmation, and it broke straight down through this this dead zone right here with another big fat candle. And we see this next dead zone that it sliced down through like butter, flick back up. So just simply 2 candles, and then we're back in the buy area of this range. So we're still in another range, which is part of a big range. So it's a bisectional range. These 2 yellow lines, people will be looking to play that accordingly, and see the movements within that range. So ranges are constantly moving, changing, adapting, but then predominantly they respect previous price action overall, and that's what this is based on, previous price action. So we're looking to summarize, we're looking to establish ourselves in this range right here, but we need a bit more time to establish that, and not just continue on down to this next range. So it needs to prove itself within this range. So patterns basically was touching on that earlier. This is a pattern. People say that ascending patterns have a higher chance of breaking to the downside, which they likely do, because this is technically a bear flag, right? Bear trend, bear flag, higher probability to continue the trend downwards. But the thing about these channels is that they can just fucking crab walk themselves for a long time. You will find examples of channels being walked out to ridiculous lengths. So it may, and also like the longer that it lasts within this channel, then the less it becomes a bear flag, right? Because it's moving up to all-time highs. If we move into a shorter term time frame, I thought this was not this cracky. It's a shorter term time frame right there on the Bitcoin price action. We can see that we're breaking down below it. So that's a bull pennant, right? That's a bull pennant. We're on the 15-minute chart right now. 1 candle equals 15 minutes. And we see that we're recently just breaking down below this bull pennant. So people will say bull pennants have a 64% chance of breaking to the upside. That's why they're called a bull pennant. But you can see clearly right now that the price action is now moving below the bull pennant. So a couple more of these candles, and we will likely find our way heading back down to test this area here. So this area here is this line that I have. I'm just going to zoom out a little bit here to the 4-hour chart. This line that I have drawn here, this horizontal line, is at the top of the candle close on a 4-hour chart at this previous area. So, a lot of the time, especially when a bull pennant starts breaking to the downside on shorter term time frames, which is what we've just seen, you'll see it move down and come around to these lows. If we start closing below this, so below the previous range high, what you'll get is confirmation that this was a local high. So it comes down up, makes a high. If we just keep going sideways and then keep moving up, that's just a ledge, right? But if we come down and close back into this range here, so candle closes down below this line. A lot of chicken scratch getting on the board right now, but if we create a local high in this area and come down and get candle closes below this line, what we will see is hidden bearish divergence. Yeah, this is hidden bearish divergence. So the price is making lower highs. If this continues down, high, lower high, and then on the oscillator, the RSI oscillator, we've made a high and then a higher high. That is hidden bearish divergence confirmed, and that suggests trend continuation. And in this case, that is trend continuation to the downside. So that would not be good for Bitcoin. Bitcoin really needs to hold this area and stay above the 40,400 mark without closing candles below there. That would start looking quite dangerous on the RSI and in many other senses. If we zoom back out to the daily, one candle equals 1 day. One candle equals 1 day, and we chuck on our moving averages. We see that we had that silver cross that we've talked about many times. It's teetering back to cross over and be just an ultimate fake out. The worst, it will have been the worst silver cross for years, other than this one, if you count that. But it will be an absolute shocker if this crosses back over, because this is generally a quite an extremely reliable signal, especially on the daily chart. So it's a big deal when you get the silver cross. It'd be disgusting. Smell like rotten flesh. And another thing, yeah, that I was bringing up earlier that's important to take note of is the fact that the 200-day moving average, what I've always said, and one of the first things that I sort of learnt in crypto is back in times where previously, like 2018, 2019, 2020, especially when Bitcoin started moving up again and getting life again in 2020, late 2020. People were trying to work out, are we in a bull run again, or are we still in a bear run? Is this a bull market, bear market? A lot of ways, a lot of people from like traditional finance will define a bull market or a bear market from whether or not they are above or below the 200-day simple moving average, not the EMA, just the MA. So that's it there. I got it as green. The moving averages that I use are, you can see it here. The 9 EMA, that's good for shorter term stuff. 21 and 55 EMA, they're the ones that I get the silver cross from. That's the gray and the blue. I don't use that one. I use the 50-day moving average as where you get the death cross and the golden cross, and then the 200-day, which is the green one right there. So you can see that there was a death cross there when the green and the yellow crossed, and we haven't seen anything near a bit of gold yet, because that would be the big one. That would be the big one, and that would be likely when Bitcoin starts moving above the 200 as well. So on a moving average point of view, on the daily chart, more than likely the one that matters most, we are below all moving averages. So not only does it look like shit, but it's also they're all, that's 1, 2, 3, 4 extra forms of overhead resistance when trying to move up. So, and they're all sort of, you see a bit of a convergence there where all three of these will probably meet around about this area here. So you could likely see that being the top of this bounce that we're getting right now, where all these moving averages converge and just create this fucking concrete block of a overhead resistance. So quite bearish if you're talking about it in a trend sense and a moving average sense. So yeah, a lot of this is peak difficulty of range trading and consolidation built for for like because like speculative interest and just interest in crypto and Bitcoin at multi-year lows at the moment, right? So who's trading this market mainly is just like the pros. So the pros are trading each other, and that's when you get multi like differences in all the signals. Or this signal will be saying these two signals will say this, these two signals will say the opposite, these ones will say this one will say the opposite, and then the thing that's most likely not to happen will probably happen. Whatever would take the most amount of money from the most amount of people is almost definite likely to happen, because this is traders versus traders right now, and it's a savage market, and it's different. I've definitely had to like up my personal learning a lot. There's a lot going on at the moment. Fucking oath. So that's moving averages. Volatility. So Marty's favorite. We'll look at the volatility. The best way to look at the volatility, in my opinion, is the Bollinger Bands and the BBWP. What we're seeing here is we saw a sharp, jagged push from one side of the Bollinger Band to the other. You'll see that it went fucking fastly directed down to the blue, which insinuated that we'd likely get an expansion when it comes off the blue, and that expansion ended up being to the downside. On higher term timeframes, it was looking like it was going to go to the upside on the 5-day and the weekly. So that's where a lot of my bullish analysis was coming from, but it ended up being the daily that held true. And we got a push straight down to the other side of the Bollinger Band. You'll see the volatility jet up past the moving average here, and only now we're starting to curl. So technically, if you're looking at it from a volatility sense, you would just expect it to continue in the direction that it's heading until this properly starts curling over. So it will be very interesting to see how the volatility acts within the next couple of days. And you got to be real suspect on it until it starts reaching the red. So you can see when it starts reaching the red, red up here, red down there, red up here, red up here. When we got red up here, we got to move in the other direction. When we got red up here, we got to move in the other direction. When we got red up here, we got to move in the other direction. Direction neutral, so it was move to the up, move to the down, move to the down. We got red up here. So when it starts getting red, you're much more of a chance for it to head and correct back to the mean, the middle area. But when it's in these middle areas here, even though it is curling, it's still extremely suspicious and likely to continue to expand until it is proven, at least moving down below the moving average, and proven that this expansion that it just did here is coming to an end, and it's beginning to contract again and move back down into the lows, and then the price will move back down towards the mean, which is that orange moving average right there, which would be moving back up to probably those moving averages that we were looking at earlier. Next thing is momentum. We talked about the RSI and the potential hidden bearish divergence. We can't get too much off the RSI on the daily here because it's just following this downtrend. It's going to take a bit. It's going to take a bit of work to get out of that. But one thing that is starting to look half decent for a bounce is the stochastic. You can see the stochastic coming off the lows here and starting to move. If we zoom in a bit, that's a nice sign to see. That the blue line there, you can see when it starts jetting up, we start jetting up, starts jetting up, we start jetting up. Not always, especially not in a downtrend, but jetting up did lead to a bit of a bounce. This jetting up led to fuck all of a bounce really, but it was still 10%, and it was still a very, very strong downtrend. Times are a bit different now. If we move back over here, you'll see like when it jets up, when it starts jetting up, we get the big moves, especially here. That's a great example. Jetting up fucking flew. And then especially in an uptrend, the stochastic is great because you see jetting up, jetting up, jetting up, jetting up. Buying on stochastic movements to the upside on the daily on a strong uptrend is, dare I say, easy money. Dare I say. But yeah, we're getting a buy signal off the stochastic here. It's just the fact that, this stochastic can can do that, and the price just sort of like, does fuck all, and that will still count as that. So upside momentum likely according to the stochastic, but that's about all that it says. It doesn't say depth, intensity sort of thing. It just says more likely. Now we look at, here we go, the fun part. How many needle dicks are getting shafted. Global open interest is the amount of leverage contracts open. How much leverage? Should start doing the leverage ratio as well. That's at all-time highs. Global open interest. So what happens? The global open interest, when there's enough people signing up to get wrecked, there's a high probability of that happening. So you'll see over here on the right, we have the amount of money. So $18 billion, $14 billion. How many open interest is how much leverage is in the system, how much money worth of leverage contracts are open. And when we start moving into these highs, these 15 billions, so if we look to the big red candle here, we saw 14.7 billion is where we got this fucking absolute destruction candle. And so basically over 15 billion, then you start saying, oh yeah, we may have a big washout. So these big washouts here, that butts, where we get like, over, double digit percentage dumps in one day. They happen because there's enough liquidity in the system, enough people have signed up to get wrecked, and wreckage incoming. So we noticed that, well, there was a pretty decent one here too, actually. So as the crypto market becomes bigger, open interest is destined to go up and to the right. So the standard of what it takes to have enough liquidity in the system to have a massive move will get higher. You would need for example, you need a shitload of it in gold for a huge dump in gold to happen. Shitload of liquidity, shitload of buyers and sellers, right? But when the global open interest moves up into these higher areas, it's definitely a cause for concern. And we moved up into the high four. So I'll just sort of wait until we broke into the 15 billion area before I started fully red flagging it. But I suppose we did just jag up there a little bit here. So that's probably a bit slow on my behalf, a bit lenient. Like I was saying, I was a little bit lenient there and thinking, maybe a little bit higher before we have the chance of large candles. But then again, these weren't fucking as big as these ones, right? So the higher this gets, the higher probability that we have huge red candle days. So it's just something to keep track of. When this is low, the probability of having like a massive dump is pretty low as well. On to the next thing, and my favorite is the funding rate. You should not base your trading off the funding rate, but it just so happens that, especially in a choppy sideways market, funding rate becomes increasingly accurate. So the red is when more people are aggressively wanting to bet that it's going to go down. The green is when more people are aggressively willing to bet that it's going to go up. And this is the 1 hour charts we're just looking at recently. And sure enough, as soon as all this red started coming in, and as soon as all these people started signing up to get wrecked, as soon as the majority was betting that the prices were going to go down, we shortly thereafter had a pump up. If you scroll back, you'll see similar. If we scroll back, we'll see more people started betting that more people were willing to bet that it goes down. We got a big pump. A lot of people were betting that it was going to continue up. We got a dump. When more people were betting that it was going to go down, we got a pump. A lot of people were betting that it was going to go up, started going down. So don't bet your socks around this, but especially when it's a sideways market, this becomes increasingly accurate. This is on, and as it starts building up, more aggressive shorts, the price starts getting enough traction and enough liquidity to start working its way to the top. My favorite is the 12-hour chart on this, because you get to capture both sides of the market, both sides of the 24 hours, and either side of the globe. And when this starts building up more reds down here, you start looking at the possibility of higher price action, especially in a consolidating market. So you see, we started building up. We end up getting on average, more reds and stronger reds in this week, this rolling week here. Price started working up, and then the opposite here, where we start getting more greens, much stronger green. Price goes down. Stronger green, price goes down. Stronger green, price goes down. The predicted is predicting like the day after, so what they think will be in the next day. So they are predicting that we'll get some green candles coming soon. More people betting that we're going to go up and bounce off the bottom side of this channel. So I'm hoping that the prediction is wrong and we get more reds, and that will give a bit more jet fuel for a stronger move to the upside, if we're talking about specifically the funding rate. But yeah, this flicking over to green here in the predicted is more fuckheads betting that it's going to go up and then likely going to push it down. So sad to see, but we'll see. Yeah, it's about 50-50 right now, right? So something to keep an eye on. Found on coinalyze.net. Funding rate. They got some other shit. You can see how many people are getting wrecked. Click on liquidations. See how many people are getting smashed. And not enough. So that will wrap it up, I believe. What do you get from that, Conzi? Anything?
Pretty much what I thought it was going to be. A lot of bears. I pulled my money out of my stocks. So I was waiting for because they released the what was that inflation report in the US?
Yeah.
And then they had
8.5% apparently.
Yeah, and then they had a massive green day 2 days after. Thinking it'll come soon, but maybe it's been price factored in already. I'm not sure.
Yeah, a lot of that does get priced in early, right?
My understanding is like it's bad, but it's not as bad as I expected, which means it was a green day.
Yeah, pretty much.
That's the way I read it.
What do you think, Steezy?
Yeah, I just think it's a really challenging market at the moment, and for most of us, we should just sit on our hands and wait for more favourable trading conditions, if that's what we're doing.
Hell yeah.
And long-term holdings, I'm happy to hold Bitcoin and ETH for fucking a decade, so I'm not no sweat here. I'm just buying when I, small amounts when I see a local bottom.
Yeah.
Or when I think I see somewhat of a bottom.
Yep.
And, over time it adds up.
Yep. That is exactly right. Couldn't agree more.
You just got to survive, survive the down days. That's the main thing. Don't try and overtrade. Otherwise, you'll just get chopped up in the meat grinder.
That's exactly right.
Good time to just learn.
Just learn.
That's the vibe I'm getting. It's fine. We got a sick bounce not long ago, a couple of weeks ago. That was like awesome. That was an awesome little downtrend bounce. So
yep.
You just gotta wait for the signs. Patience. Soak in as much as you possibly can.
And don't ignore the 20+ take profit signal signs and posts.
Make sure you got the Telegram channels not muted, on notification. Because we'll give you plenty of warning.
That's right. All right. See you, boys. Have a great Easter.
Happy Easter, lads. Talk soon.